Hello, this is Paul Harris from Mining Stock Daily, and breaking news today, Calibre Mining is going to do a transaction with Fiore Gold, and I have a great pleasure to be joined by Ryan King, SVP at Calibre, to talk a little bit more about the deal. Good afternoon, Ryan.
Well, good afternoon, Paul, and thanks very much for having us on. It's an exciting day for Fiore and Calibre to announce this agreement.
It is, and just for those people that don't know, it's about let's say $178 million Canadian deal. Calibre is going to buy Fiore Gold, a 44% premium, a cash and stock deal, which will result in a company with a production profile of about 245,000 ounces a year. Congratulations on that, Ryan. We've spoken in the past about Calibre's big picture is to acquire assets and to grow. So clearly this is a transaction there. Perhaps surprised many people that the target asset was in Nevada. Perhaps more people were expecting you to stay in Latin America. Obviously, you've got a good strength there with your production base in Nicaragua. Tell me how the deal with Fiore and for Nevada assets came about.
Well, thanks. Yeah, no, you're right, Paul. And that's always been our vision, to grow the business organically with the assets that we have through the drill bit. And of course, if you recall, Calibre's got a hub and spoke operating strategy, where over the last 24 months, we've implemented that hub and spoke. We've brought on new satellite deposits. We've permitted projects in Nicaragua, and we have grown production. 2020, we had 136,000 ounces of production, and we increased production 30% organically through the implementation of this hub and spoke for 2021's guidance of 170 to 180,000 ounces. And to your point, Calibre's vision has been to patiently and accretively grow production through operating expertise. And when we looked at this opportunity, and of course, we look at a number of opportunities. Not only do our operating teams and exploration teams look to grow the business through the assets that we have, and we do that on a daily basis, but of course, our team is also looking at opportunities outside of the country and outside of our current asset base to grow the business. And this was one of those unique opportunities where, again, we were looking for production. And our group has always looked for, a suite of assets where we can unlock additional value, like we did with the Nicaraguan assets. This was a win-win deal back in 2019 with B2 Gold. B2 Gold retained 33% of Calibre because we were going to be 100% focused on the assets and put 100% of our financial resources back into those assets. Here's a similar situation where a smaller gold producer in Nevada has a growth pipeline with the adjacent Gold Rock development stage project. So it's the Pan operating heap leach mine in Nevada, which produces between 40 and 50,000 ounces a year. Tim Warman, CEO of the company, they've got a great operating team. They've delivered on their commitments there, and they've been generating some good operating cash flow. But what this deal allows us to do is look at unlocking additional value through the drill bit, but also looking at bringing on and developing the Gold Rock project, which, based on their PEA, could take them up to a combination of 100,000 ounces a year in Nevada, with over 220 square kilometer land package of very prospective exploration potential.
Well, this seems to be right in your wheelhouse. You mentioned the hub and spoke approach, but you've also been investing heavily in exploration in Nicaragua. Gold Rock is just a few kilometers from Pan. So you've got the operating center, the mill, and what have you at Pan. You've got Gold Rock, a development project a few kilometers away. You mentioned you've got a 200 odd square kilometer land package. And I imagine you're going to really aggressively go after the exploration there to potentially find more deposits to bring in. But beyond that, are there other potential deposits within trucking distance of Pan that you might have your eye on as well?
Well, at this point in time, it's still early days. We've done a pretty significant amount of due diligence on the resources and reserve at Pan to make sure that it reconciles properly. Also looking at the exploration potential in and around the operating Pan mine, because there hasn't been a lot of exploration executed because Fiore has been focused on the operation. They've been putting money back into the business. They've installed a crusher. They've expanded their heap leach pads. So they've been putting money back into the business. And with this combination, we can now unlock exploration along the pan trend, but also, methodically and thoughtfully advance Gold Rock. So Gold Rock would likely be a standalone operation, but again, another heap leach operation with really, really good potential to expand the size of the current 500,000 ounce resource. I mean, an example would be earlier this year, the Fiore team announced some drill results, and in fact, a discovery located about 1.5 kilometers north of the 2020 PEA resource pit. So, that tells you there's really good prospective potential. They've discovered a new zone. There's still a lot of opportunity for growth. And that's where our focus will be over the next, 12 and 24 months, is to really understand what that opportunity looks like.
And again, that echoes the B2 deal. The B2 assets hadn't seen a lot of exploration immediately prior to buying them up. And so you had a lot of targets to attack and ground to attack with the drill bit there. Now, it's a cash and stock deal. Whose decision was that? Did you want to do an all cash deal and they asked for a stock component as well?
No, I mean, when we look at the analyst consensus numbers of this deal, obviously, cash is important because it allows you that opportunity to reinvest into the ground, where that can really have a significant impact on share price performance, discovering new zones, or expanding resources. So we wanted to look at the right fit that would be beneficial to our shareholders and the Fiore shareholders in a win-win deal. And I think this way, the Fiore shareholders get a nice upfront premium, and the Calibre shareholders get a nice mix of assets with exploration and growth potential that could take the company from 40 to 100,000 ounces a year on what we know today.
Okay, for me, it looks like and sounds like a very good deal, but the initial market reaction wasn't that way. The stock fell. Your stock was down, let's say 10% at one point on a day when the gold price was back up over $1,800 per ounce. I imagine you've been on a lot of calls today. What sort of feedback did you get from the market, from the institutions?
So far we've got a number of analysts that cover Calibre and have been announcing basically support and positive feedback so far on the transaction. Again, scale seems to matter right now in this type of a marketplace where there's significant amount of passive capital coming into our space. So this allows Calibre to go from a 170 to 180 to almost 250,000 ounce a year gold producer with good potential. It's no different than a lot of the deals we've done in the past, where, take, for example, Newmarket Gold. We acquired 3 producing gold assets in Australia. And when we started to do that and announce that deal, the stock fell down. And the same when we acquired the assets and partnered with B2 Gold in Nicaragua. The immediate reaction was a pullback in the stock until people understood what the path was, what the plan was, where the capital allocation was going to be, what the prospectivity was. So it's very early days. This is pretty typical when an acquirer takes over an asset which has the potential to grow.
Well, yes. I mean, as you say, it's going to increase your production profile over 200,000 ounces a year, and that's quite a select club, if you want to phrase it that way. And your all-in sustaining cost will be 1,000, 1,100. So a very good margin there. So you'll be generating a lot of cash flow to invest back in the business and to execute the exploration plan to find more spokes to your hub.
Mm-hmm. No, exactly. And then that will be a focus of the company is if we look at what we've been able to do with the Nicaraguan assets, one of those assets, Libertad, was actually heading towards closure. But through looking at the assets through a different perspective, we've been able to unlock and implement that hub and spoke. But now, what could be with the Nevada assets? It's kind of a rinse and repeat of what could be done here. And because we do see growth potential, and because Tim and the Fiore team has done a very good job of delivering pan to have reliable 40 to 50,000 ounces of production, yeah, we see good potential to use this as a stepping stone to maybe see what else could be with the Nicaraguan and Nevada assets.
Okay, how did you sort of arrive at the sort of 44% premium? Looking back through sort of my list of recent mergers, you're pretty much banging there between the sort of 30 to 50% mark that a lot of recent transactions have had. And it does seem that premiums are getting back towards the level they were, let's say, a decade ago in the last cycle. So how did you negotiate or arrive at that position?
Well, Paul, lots of due diligence, lots of back and forth and discussions with the Fiore CEO and his team. And really, it was a combination of us doing due diligence and them doing due diligence on us, and what we've been able to do and what we've been able to execute on, delivering production quarter over quarter for reliable production out of Central America as well. But really, it's just looking at the asset valuations, what we feel would be a good deal for both sides, so that owners of pro forma Calibre could appreciate a nice share price re-rating as well. But a sufficient deal for the Fiore shareholders so that we'd be receptive to get this deal done. And you look at all of the analyst consensus, this is accretive on many metrics. We believe, based on our due diligence, this is a good deal for both parties as well. And again, we go back to the financial flexibility of the pro forma company, having almost 100 million in cash. This will really allow us to reinvest into those assets and, of course, the Nicaraguan assets to unlock more value and hopefully have share price appreciation from here.
Okay, you mentioned earlier B2Gold as a shareholder. I think you said a 33% shareholder. So what was their sort of response when you approached them and said, look, this is what we're thinking. Do we have your blessing for this? Obviously, you did get their blessing. They're supporting the transaction. What was the sort of the conversation there?
Well, and you're exactly right. They've entered into a voting support agreement on this deal. Pro forma, they would become a 25% shareholder of the company. One of their representatives sits on our board, so very aware of what's happening. And remember, again, it was really a win-win deal when we approached B2Gold and partnered with B2Gold in 2019 about the vision of Calibre, not only focusing on executing and building out and reinvesting in Nicaragua, but building a multi-asset, multi-tiered gold producer. So based on the voting share agreement, the voting support agreement we have with B2Gold, you can see they're supportive of our path and our view to be able to unlock more value for all shareholders.
Okay, thank you. How quickly would they like to see a dividend out of Calibre Mining?
Yeah, I really can't speak for B2, but Calibre's vision right now is to try and unlock that value in the actual assets rather than dividend cash back out to shareholders at the moment. I really believe that there is opportunity for nice returns for Calibre shareholders at these levels. When you look at an enterprise value to ounce of production, on pro forma Calibre with this pro forma gold production, we trade at a significant discount to peers. I think it's about 2,200 per ounce of production versus peer averages are around 5,500 per ounce of production with slightly lower production profiles. So, when you mix that together, you can see a clear re-rate opportunity. And especially if we're able to deliver and execute on building that 40 to 100,000 ounce base in Nevada, I believe you'll see a significant re-rate with Calibre.
One of the sort of clear benefits of the Fiore acquisition and the Nevada assets is it improves the political risk profile of the company's assets. The main assets are in Nicaragua, which is perhaps a jurisdiction that many people are not familiar with, and perhaps your valuation gets discounted because of that. So this certainly helps improve that aspect.
Yeah, that's a good point, Paul. And again, we had always signaled to the market that we'd be looking at, patiently growing the business, not only in the country like we've been doing through hub and spoke and advancing organically, growing and using the installed processing facilities and good infrastructure in country, but looking outside of the country as well. And you're bang on. This does diversify that portfolio from that geographical perspective. Now, that being said, inside of Nicaragua, we have, there's a very strong mining legislation, as you and I have talked about in the past. It's evident that they're supportive of mining by the fact that we've had permits for new open pit satellite deposits. We're hauling material over public highways safely and responsibly and with the blessings. So we just make sure that everything that we do, it's very transparent with our host communities. And we engage with all of our stakeholders, whether that be communities, local governments, or national governments, to ensure that we're adhering to the highest standards.
Okay, thank you. Now, obviously, the sort of near-term priority is closing the deal. With Gold Rock, you've got a development asset, and the April 2020 PEA put a development cost on that of $65 million. You mentioned pro forma, you'll have 100 million in the bank, so it looks like you'll be able to fund that through cash and cash flow. You won't have to take on any debt, and you'll remain debt-free.
That's right. That's right. And that's the focus, to ensure that we have a clean balance sheet going forward. And that was one of the aspects that we reviewed in this transaction. Can we self-fund through operating cash flow and the cash balance that we have? And indeed, not only can we do that, but we can aggressively advance exploration, not only at Gold Rock, but at Pan, and as well keeping the cadence up with our exploration programs in Nicaragua, which, as you've seen over the last several months, have been, I think this year we'll do almost 90 to 100,000 meters of drilling in Nicaragua. So we'll keep that cadence up. We see still very good potential with all the assets that we've got in Nicaragua, and most recently we've been getting approvals from the government for new mineral concessions along a well-known trend in the western epithermal belt of Nicaragua.
Excellent. Well, it sounds like there's many more exciting things to come out of Calibre Mining. Ryan, thank you very much for joining us this afternoon. Unfortunately, that's all we have time for. So until next time, Ryan King, SVP at Calibre Mining, and I'm Paul Harris for Mining Stock Daily.